What's up guys, it's Bill Hawk here, and today I'm going to be talking about something that I don't necessarily like talking about or want to talk about, but I have to, and it's the stock market crash. And the reason why it's important to talk about is because it's important to know the macroeconomic environment in which you're investing in. Yes, you can invest based on fundamentals, and if a company's solid, you don't care whether it fluctuates up and down, but let's face it, who wants to lose their hard-earned money in the short or medium term? I definitely don't. I work too hard for that. As a full-time investor, I necessarily don't have the tolerance to experience a lot of fluctuations in the market. And yes, I'm hedged with a lot of different asset classes, but my riskiest positions are long-only equities, which is what I mostly share here. So I stick with Warren Buffett's rules of investing. Rule number 1, never lose money. And rule number 2, never forget rule number 1. As always, before we start, I'm gonna ask that you please hit the like button, please subscribe at any point in the video where you feel like you got some value. I'm not asking you to do it now, do it when you feel like I deserve it. So let's face it, a stock market crash or correction is due, and it's not a matter of if, it's just debatable when. So I hate to break it to these self-proclaimed apes, but this meme market isn't gonna last forever. And I don't know what you wanna call it, but this isn't a traditional bull market or a bear market. This shit is an ape market because there's just nothing like this. It's completely unprecedented. The catalyst for what's gonna shift the market sentiment is also debatable because nobody really knows what it's going to be. But in this case, with the unprecedented liquidity that we have in the market, I'm going to say, and I'm going to bet that it's probably going to be the Fed tapering signal. And note my use of the keyword signaling and not actual tapering. The other viable catalyst is the Delta variant, but I'll give you my thoughts on both of those and why I think it's going to be the Fed tapering signal instead. Since the pandemic started in March of 2020, the US Federal Reserve, or the Fed, cut the funds rate to the range of 0 to 0.25%, but they also began purchasing $120 billion of bonds per month for additional stimulus to the economy. The asset purchases are also known as quantitative easing, which increases the money supply and liquidity, which in turn stimulates the economy. But what exactly does this money printing do? Well, it lowers borrowing costs for spending or investing. It puts downward pressure on long-term yields to boost investments. It directly supports the lowering of interest rates for residential and commercial mortgages. So of the $120 billion of bonds they're purchasing every month, $40 billion of that is going directly to mortgage-backed securities. And finally, it ensures the functioning of the financial markets. The Fed balance sheet has grown significantly since the pandemic, which you can see here. In fact, it's said that a third of the US money supply was printed during the pandemic. But what do you think is going to happen once the Fed stops supporting the markets and the economy by tapering its liquidity and bond purchases? Well, it's pretty obvious that asset prices, including equities, is going to face downwards pressure. But guess what? The fear of it, or the expectation of it alone, is going to be enough to drive prices down to a correction or a crash. And the expectation of it or fear of it is going to happen once Jay Powell signals it, which he promised to do several times. This exact same thing actually happened in 2013 when the Fed signaled tapering, and there was an overreaction in the markets famously known as the Taper Tantrum. And as you can see here, the yield spiked up significantly, but when the actual tapering happened, yields ironically started decreasing. So as you know, when the yields go up, prices go down, especially with our most loved tech stocks. So when is this tapering going to happen? Because we need to know, right? Well, in the last Fed meeting in July, Powell acknowledged that progress was being made on taper conditions, but there's still a way to go. In fact, he said, "We're making progress, we expect further progress, and if things go well, we will reach that goal." I don't know what to make of that, but I'm going to assume that it's coming. Next Fed meeting is on September 22nd, so make sure you mark that on your calendar because yes, I do believe that's when the market's going to correct or crash if they signal tapering, but if it doesn't happen then, it's going to happen on November 3rd. And yes, the Delta variant is a wild card, but for now, let's ignore that and focus on the signals that we need to watch before the signaling, which is inflation and unemployment. So in terms of inflation, although the Fed looks at something called the Personal Consumption Expenditures Index, or PCE, we're going to take a look at the more broadly looked at CPI. And if we look at last month's CPI data, there's in fact data to prove that this inflation that we're seeing is in fact transitory and it's starting to cool off a bit. Most of the inflation was in the areas of energy, but other items like used cars and appliances also contributed, but they were mostly due to temporary supply constraints. This means that the Fed appears to be right with their transitory inflation thesis and probably doesn't support the tapering of bond purchases just yet. So it's good to be aware that this contradicts the argument that I was making earlier that we're likely going to see tapering of bonds next month. So this is something to be aware of because this just means that stocks and tech stocks especially will continue to go up. But keep in mind, this is just a bullish case for the short term. We have to taper eventually, or some sort of catalyst is going to come where the market's going to correct. And I think it's still going to happen before the end of the year. But it also means that you have to stay in the market. You can't be out of the market because you might miss out on some potential gains, but keep some cash aside. Well, I can't tell you what to do. That's what I'm doing. So yeah, I still believe that something's gonna happen before the end of the year. That was the CPI, which is what consumers pay, but the PPI, what producers pay or businesses pay, said a different story. Think of this as a leading indicator for the CPI, and this came in a bit hotter than expected. It came in at 1% month over month, where the expectation was 0.6%. So this tells us that inflation is probably stickier than we think is gonna be, or the Fed thinks is gonna be, and it supports the condition for tapering bond purchases sooner than expected, which supports downward pressure on prices sooner. So yeah, like always, it's important to get as much data as possible and weigh in both sides and then make your argument or your opinion. So that was the first point. Now let's talk about the second point, which is unemployment. Unemployment data seems to be coming in strong and supports the case for the bond tapering to be sooner than expected. In fact, last month, 943,000 jobs were added and the unemployment rate dropped to 5.4%, which is pretty good considering their long-term target is 4%. So yeah, I think we're gonna get to the full employment by next year for sure, which means the signaling has to be by the end of the year. So the third and final metric, which I left for last, is the Delta variant. Now, I'm not a health expert, this is why, but unfortunately, everybody right now needs to be one. They need to do their research and know, even if it's for your personal life or your mental sanity, to know when the hell this thing is gonna end. Based on the data, I don't believe the Delta variant is as big of a threat as it's played out to be right now. Cases are increasing in the US about 50% off the peak of the largest or second wave in January 21, but death rates are 18% off the peak. This means less people are dying, and about 50% of the US population is vaccinated, which I guess is helping reduce the hospitalization and severe symptoms. We know the Delta variant is 40 to 60% more contagious than the Alpha variant, but it's still questionable whether it's more dangerous. However, it's pretty clear that the unvaccinated people are more vulnerable. Given that 60% of the population is now vaccinated with at least one dose, I don't think the Delta variant is going to be as big of a threat as the Alpha variant was to the economy. At least that's my hope, and I just really, again, like I said, just want this shit over. But if people are afraid with the Delta variant in the markets, I'm going to perceive that as a buying opportunity. Okay, so how should you position your portfolio accordingly? Well, I can't tell you what to do, but I can tell you what I'm doing given my opinions that I just mentioned and the fact that I think that the tapering is going to happen, the signaling of the tapering is going to happen before the end of the year. I mostly consider myself a technology investor because that's what I believe in, that's what I love, and that's what I understand. But right now, I'm also going to be focused on more industrials, more consumer defensive, because I think it's important to have some value plays right now given the potential catalysts ahead. But I will buy anything where the opportunity presents itself of companies that I want to own, not trade, because that's just how I invest. And that means that I won't be playing financials, I won't be playing utilities. I know there's a lot of potential upside there, and people are chasing this back and forth growth and value play, which I don't want to play that game because I like to have my freedom on my days where I don't need to look at the computer, although I do look at it every day. So I'm going to hedge myself by keeping 30% of my long-only equity portfolio in index funds because it prevents me from having to chase this value, cyclical, and growth plays. I just don't want to play this cat and mouse game. It's not me. So yeah, that's what I'm going to be doing. I'm going to be buying opportunistically as things progress. I'm going to be waiting for that big opportunity when the Fed signals the tapering. If you like this video, please hit the like button, please subscribe, and please subscribe to my newsletter. The link is in the description. It will keep you updated with the watch list of companies that I'm going to be watching over these next few months. And until then, I'll see you in the next one.